know it's been a while. I've been very patient. I've been very patient. I told myself as I dropped my son off that if I seen a setup, I was gonna take it. It looks like we're going short this morning. Reason why I say we're going short, I started on the 4-hour time frame to see how we're looking. Okay, we have been making, all-time highs on here. All right, we broke above 75.39, came up to the 70s, dropped back down, breaking this low right here. If I go down to the hourly, we can see that we broke down through the MA, we came back, and right now we're retesting it. And for 1, 2, 3, about to be 4 hours, we haven't been able to close above here. So if it comes back up, I'm gonna try to catch a short. All right. And that's how we're gonna do it. Yeah, so now we're waiting. It's 9:05. I'll look at my clock over here. So it's 9:05 right now. I actually do have to go to work today, unfortunately, so I only have about an hour with you guys, man. I have an hour with you guys. How you feeling? Let me see. It's like M and Q. It's like it's attempting to break through. M and Q is oftentimes a leader, so I gotta be careful. But it seems like, yeah. Yeah, so it looks like YM is already moving to the downside. Yeah, so I can get some type of poke above this MA. We'll go ahead and take something. Looking forward to at least come down here. But if we can break this level, this gap that I created on Sunday, that should be more than enough for us anyway. Yeah. guaranteed, or I don't want to use the word guaranteed here, but 73 ticks, if it breaks that level, then I'd be looking for prices to go ahead and just fill this gap. But if we do end up breaking down and it looks good enough, then I might wait for a retest. But at that point, the setup is kind of cooked. The setup is cooked. So we're just gonna wait. I'm gonna wait. Came up, dropped down, rejected from MA, came back up. Looks like it created a new high up. So this is currently being respected right here. Yeah, to me, like it just makes more sense on the hourly right now. Visually, it just makes more sense on the hourly, which means I want to give myself permission to hold this strength just a little bit longer. But if the strength comes below 500, then yeah. Buyers for sure. I wonder if I'm allowed to actually trade metals on here, because trading with my funny futures, dog. They said, oh, metals is too volatile right now. It's like, bro, how long y'all gonna keep it like that? The games that they play. But shoot, if I see another copper setup on there, you know I'm a... Like oil came down pretty low too, from $105. What's oil looking like? Yeah. Nothing.
got kids who've outgrown their bunk beds. You've got one bathroom. Hurry up! You've got an office that's also your kitchen. You've got memories to make and need more space to make them. That's why at Virginia Credit Union, we've got competitive rates on home loans, plus $500 off closing costs when you purchase or refinance. Become a...
All right, we get it, man. Yep, now we're literally just waiting on our hands. Now we're sitting on our hands right at this point. Yep.
Taco Tuesday, indeed, indeed.
Just playing around the zone. Just playing around the zone. It's like we don't have any like yeah, like the only real pivots can be seen like on the 15th. Cause you see we got white, white, followed by black, black. Becoming white, white. We can call this doji black for real. Black, black. So that was the turn right there. But to be real with you, I want to see this joint pop up one more time. I need like 550 for real. Yeah, give me 550. If I don't get 550, nothing personal, but I need that. 550, I need that.
Good stuff indeed. Yes, sir. Just cleaning off my desk, making sure we're clear. Honestly, my desk should have been clean before I even hopped on here, but you know what? That's in a perfect world, man. Looks like we're going short from that level. Ooh. Before 9:30. Could reject one more time, but I mean, the high definitely is getting lower, so. Yeah, that was a good one. Oh yeah. That might be it though. That's okay. That's okay. I'm not even gonna press it. I'm not even gonna press it this time. It's a good looking range though. Playing around the 30s. This bread right here is probably gonna have to get collected. Either it's gonna break through or it's gonna play around. Just show the range right here. So, man, shoot, let's just see. Let's just see. It's got some pretty good size to it. Remind me of this one. Like it left without me, gang. That's alright. Shit, that was set right there. Sure was 60. That's all I was looking for. That's alright though.
Granger offers professional-grade products, easy reordering online, and 24/7 support, helping procurement managers keep buildings running so people can keep working. Call, click, or stop by. Granger, for the ones who get it done.
Let's see what it does from here. This may just be a long opportunity, maybe. Shit, looks solid so far. This one's interesting. So we have a 4-hour doji. It swept the bottom, barely, and hit the top. I mean, because we're in an uptrend, ideally I'd be looking for longs anyway. So let's see if price doesn't come back down again, because the way it looks like now, these guys bought London's price, and I think that's fire. I think that's fire. So come down for us again, maybe around, thinking about buying 520. Don't think it'll come down that low, but that's okay. Liquidity's here at 525, I get that, but I'm not buying 525. I need to come down to at least 20.
Got less than 20 minutes. It's been fun hanging. It really has. Yep, that was my setup. Either of these would have done, and I've missed both of them, but that's okay. We have 18 minutes. Before I go, I wanna share an audio. I wanna share an audio that I actually made back in 2024. And basically my wife was talking to me, I think it was yesterday. Either yesterday or it was 2 days ago. And I was getting ready to go to work. And she was like, basically, it's like you're always looking to study new things, and you're always looking to learn more. It's like you're one of the smartest people I know. And I took that and I was just like, oh my gosh. First of all, she didn't know how much that meant to me, but also I realized how much I've been slacking and how much I haven't been, endeavoring to learn new things like I used to, and how I used to break down interviews and things like that. And I always used to listen, for gems and pieces. And to be honest with you, that's something I should still be doing. And I went back to one of these early clips that I made, breaking down Mark Douglas's Mind Over Marcus interview, and I ended up making a fire meditation. And I was listening to it again, and I was like, oh man, I said, this is genius. I wonder how many people could use something like that. So here's what I'm gonna do. It's about 15 minutes. You got 15 minutes to 10, so I'm just gonna play it. Let me turn this off. My mind is over the markets, and I think in probabilities. Let's do it.
People assume that because their technical method gives them a signal to get into a trade, that if the method produces a high percentage of winners, it will equate to a consistent income, not taking into consideration that the proper execution of those signals requires mental skills.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused on the process, staying positively focused on the process itself, in this case of throwing the ball, in our case obviously of trading or following your method, right, and not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Exactly right. Exactly right. We may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method, our trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear. No matter how good a technical method is at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with. For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take the loss where we get stopped out and the market trades back in our favor. Our method can't prevent us from hesitating and getting in too late. Or our method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops. And our method can't stop us from getting out of a winning trade too soon and leave money on the table. Nor can it prevent us from letting a winning trade turn into a losing trade without having taken any profit. And all the mental errors I just listed are the result of thinking, believing, or assuming that our technical method is telling us what's going to happen next on a trade-by-trade basis, and not understanding that technical methods aren't designed to do that. Technical methods and patterns are designed to put the odds of success in our favor over a series of trades. It may not seem like it on the surface, but there's some profound psychological implications here. What this means is the outcome of the signals generated by any technical method on a trade-by-trade basis are unique and random. In other words, there's no way to know in advance what the outcome to any particular signal will be or what the sequence of wins or losses will be over a series of trades. No way to know in advance what the outcome to any particular signal will be or what the sequence of wins or losses will be over a series of trades.
By accepting the randomness of these outcomes, they can produce consistent results.
This is the principle that's been used by casinos for hundreds of years.
Right.
Technical methods and patterns will give the individual trader the same kind of advantage the casino has over the individual player. If the trader can think about it from the proper perspective. Frustration comes from our expectations. It's from expecting something from our technical method it just can't do. Technical methods define and identify patterns in collective human behavior. Right. Now, the patterns definitely exist. They repeat themselves over and over again. The problem is the outcomes don't always correspond with the patterns on a trade-by-trade basis. So what I'm saying is that, yes, we have patterns, yes, and they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent, I should have an outcome that's consistent with the pattern, right. and that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and the pattern. This trade, the trade I'm in right now, could turn out to be a winner, and does that mean that the next trade's going to be a winner? Absolutely not. This trade I'm in right now could end up being a loser, and does that mean that the next trade is going to be a loser? No, absolutely not. Absolutely not. A random distribution between wins and losses over any sequence of trades that you might look at. All prices are people-generated events. Everything happens because of what people believe. When you look at the nature of trading and break it down to its simplest components, what you have is everyone trying to do the same thing. There is no possible way that any of us can make money as traders unless we can buy low and sell high, or sell high and buy low. If I'm going to buy, it's because right now, let's say the last price is 10, and I put in an order to buy something at 10, okay? It's because I believe that the market's going to go to 11, or it's going to go to 12. Certainly if I thought or I believed it was going to go to 9, I would wait, would I not?
Correct.
So the reason why I'm buying at 10 is because that's what I believe. In other words, you know, all price movement is based on people's belief about what's going to happen in the future. Now the reason why we have price movement is because everyone has a different idea about what is high and what is low. There are traders, there are thousands of traders out there who do move prices, and that it is their intention to move prices. Or you can have a large group of traders coming into the market and then cause prices to move. But what actually has to happen for prices to move is this, is that if the last price of something is 10, for the market to actually move to 11, all the offers have to be taken out, meaning that, or move to 12, all the offers at 11 have to be taken out. So in other words, people who are trying to sell at 11, they have to get their orders filled before it can get to 12. Okay. Well, for someone to actually bid it to 11 or bid it to 12, they are doing the exact opposite, and this is really critical. They are doing the exact opposite in that moment of what it takes to be successful. Okay. They're not buying low, they're buying high. They're buying high relative to the last price. Technical methods do, whether it's a visual pattern or you know, moving averages or any wise trade or whatever, you're using mathematical formulas. Okay? You're taking data points. In other words, you're taking what people believe about the future, transforming them or transposing them into a data point as a price over time. Using these data points into certain types of mathematical equations, you can find patterns in collective human behavior. And what these patterns mean is this, is that when this set of criteria, okay, is present in the market, that there is simply a higher probability than not. In other words, there's a higher probability, or what I'm going to call an edge, a higher probability of one thing happening over another, that other people are actually going to come into the market and bid it higher from here or offer it lower from here. There's just, in other words, when the pattern is present, this collective pattern is present, it will repeat itself. But the problem is that it repeats itself on a random basis, because even though the actual mathematical criteria is exactly correct or exactly the same.
You can't, mathematical models can't predict human beings.
That's right. Mathematical models can't predict who the actual individuals who are going to come into the market and actually do it. It takes someone else to make us a winner, right?
Correct.
Okay. When you put on a trade, you think about who that might be, who might come into the market to actually make you a winner?
No, of course not.
Yeah, no. And if it turns out to be a winning trade, do you know who those traders were or who that trader was that actually made you a winner?
No.
Is there any way to know?
No.
There might be, but it'd be pretty hard to find out, right? When the pattern presents itself, we don't have any idea of who is actually going to come into the market to do this for us. And so there's no point in analyzing. There's no point in judging. There's no point in trying to figure out whether it's going to work or not. Flip the coin once, it comes up heads. Flip the coin twice, it comes up heads. The next one's tails, the next one's tails, the next one's tails. In other words, we could have streaks of heads or tails, okay? We could have streaks in there. The point that I'm making is that there is no way to know the actual sequence. If we want to be able to trade our methodology in an effective fashion, to be able to utilize this methodology in a way where we can extract the maximum amount of profit that it makes available to us based on the pattern that it identifies, we have to do it in certain ways. In other words, our mind has to be free to be able to execute these trades without making trading errors. And the trading errors come from believing that because the pattern is present, that it's going to give me a winning trade on this one. This trade is going to be a winner.
You can't think that way.
No, you can't think that way.
You can't think that.
That's the way the typical trader thinks.
Right.
Depending on what the ratio is between what you have to risk to find out if a trade is going to work and how much profit it generates when it does, you don't even need a 50% win-loss ratio. First things to be a successful trader that you have to learn, other than the fact of finding a good edge, meaning something that puts a pattern, a collective pattern that your edge identifies, that puts the odds in your favor, that there's a higher probability of one thing happening over another once this pattern is present in the market, is that you have to learn how to think in probabilities. In other words, you have to get your expectations aligned with the way the market actually exists. Right. And when you do, in other words, when you learn these kind of mental skills and you're able to execute your trades without fear and without hesitation, without analyzing, or even without thinking for that matter, because you don't need to think. What a professional trader thinks about when there's an edge present is, does he think about whether the edge is going to work? Absolutely not. Because he knows, he has learned, there's no point. Right. There's no point in analyzing or judging or building a case for or against whether that trade is going to work, because he understands the human component. Okay. What he does think about is he thinks about the risk. How much do I have to risk? How far am I going to let the market go against this position to tell me that other traders are either going to come into the market and make me a winner or not? And he also has a plan for how he's going to take profits. As the market's going in my favor, what's the risk of finding out that it's going to go further? And that's why, that's why so many professional traders or people who teach trading advocate scaling out of positions. How does believing in a random result affect your expectations? Because see, what we don't want is we don't want to get into trading with the possibility of being disappointed. And the problem is that when that potential exists, it has the effect of affecting the way that we see market information in detrimental ways. Because, in other words, all of us have these mental pain avoidance mechanisms that affect our perception of information. Right. So, for an example, if I'm in a losing trade, and I got into this trade thinking I was going to be right. Okay? In other words, I did all my evaluation, I did all my analysis, I did my work, I built a case. Right. It's like as the market's moving against me, I'm going to have the tendency to focus on information that tells me that I'm right and ignore the information that tells me that the market is actually trending against me. Okay. In other words, I can identify a trend, but I won't be able to identify that trend if I'm putting an inordinate amount of significance on the information that's telling me that I'm right, as opposed to ignoring the information that's telling me that I'm wrong. And see, and overall, if we want to be consistent, the principle that we need to keep in mind is that to be consistent, we have to cut our losses and let our profits run. We have to make more on our winning trades than what we lose on our losing trade. If I'm susceptible to being disappointed or betrayed, meaning I get into a trade, expecting it to do what I think it's going to do, that I'm going to have this tendency to distort market information that causes me to hang on to my losers. So critical to predefine your risk before you even get into a trade. And that's why professional traders don't think about it any other way, because they know it takes other people. That you know, my reason might be great, but if someone else isn't buying into it, what difference does it make? It doesn't matter, because it's not a winning trade. And so, you know, if we have this susceptibility to be disappointed, what it does, it affects our perception of market information in a way that doesn't allow us to cut our losses.
How do we make ourselves not susceptible? I mean, how can you
by changing, yes, by changing your perspective on this, by really understanding. What we have to set our mind at is how to change our mind. Okay? And that's why there's so many people who are so close to getting it, but never really get beyond that
What's
threshold.
that hurdle? Why can't?
Because people don't want to change the way they think. It's that simple. People don't like changing. You know, if consistent results are your objective, you know, then you're going to have to learn how to think like a professional trader, because that's what they do. They make consistent results. You have to learn to change the way you think about trading in a way where it doesn't cause you to have this potential to think that you're going to be disappointed or betrayed or put you into a state of emotional pain. It's like getting to that carefree state of mind. And once you get to that, once you shift your perspective, everything changes. It's not about being right or wrong. And you know, when you really understand that, and then you go through the process of learning how to accept the risk of losing, then everything about your trading will change. An edge is just a higher probability of one thing happening over another. That's all. Just a higher probability of one thing happening over another. But keep in mind that within the context of what we've been talking about, it's a higher probability happening over another over a series of trades. A series, okay? So in other words, you know, like for example, what I do is I teach people to trade in sample sizes. Right. So that instead of saying to themselves, I'm going to take the next trade, I'm going to take the next 20 trades.
Right. I'm going to keep myself in the game.
I'm going to keep myself in the game and see what happens over the next 20 trades. And then if I get the kind of results that I like, I'll take another 20. If I don't, I'll tweak my methodology so that I get better results. It wouldn't be unfair for me to say that there's probably what I'm going to call the profit gap. The gap between the potential and your bottom line results. You have to learn more about yourself and how you interact with your trading platform and the market to be able to fill this gap.
And that was the audio. I hope y'all enjoyed going on 10 o'clock, and yep, there we go. All right, much love from the DMV, and I'll catch y'all later. Peace.